Welcome to Markets Today. I'm your host, Mbaabu. We have spent the last couple of sessions looking at different asset classes and trying to identify some of the buying opportunities. If you missed our show yesterday, we actually were specifically looking at equities and identified some top stock picks that would be worth your while. If you missed our show last week, we were looking at government debt, looking at fixed income assets, and trying to paint a picture in as far as where you need to be allocating. One of the things we had is put your money in the 91-day T-bill as you await to see opportunities in other asset classes. Today, we take a different tangent. We are looking at the real estate sector. We want to understand, where were we before COVID? What has happened during COVID, and what are the key considerations that you need to put in place if you are an investor or considering making an investment in this sector? We are joined by Lilian Mbaabu. She is a portfolio manager overseeing a couple of real estate projects in the economy. Lilian has 15 years of experience looking at both commercial and residential, and she will be sharing her insights with us today. Welcome to the show, Lilian.
Thank you for having me in there.
Most welcome once again. Maybe you can give us an overview of where was the real estate sector before COVID and what is happening because of COVID?
I'm just going to delve straight into it. We've had a not so good run since elections, since Q3 2016, and then elections happened and we continued to suffer in the real estate space, where we realized we witnessed a slump in the sense that the vacancies went up, the investors who were taking up space in the commercial space were not there, and beginning 2019, we started seeing an improvement. Actually, it was noticeable in the sense that the vacancies were reducing. We were able to get better yields in the spaces in terms of rent and all that. And then come March 2020, and COVID happened. And we do not know what's going to happen now because things have taken another turn. Not sure how it's going to be, whether it's for good or for worse.
I like that you say that there was a recovery before COVID. Maybe we can just spark the conversation for COVID. When you say there was a recovery from 2016 through to 2019, what were the key parameters that made you comfortable in this space? Was it the rental yields? Was it vacancy? What actually was attributable to the positivity in this sector?
The most obvious, I would say, would be the rentals that we're able to obtain in the spaces that we have to let, and the fact that the vacancies were reducing. Primarily, when you have, let's say, one huge commercial property that you're letting, you will tell how the economy is doing by how many inquiries you get, how many of those are able to convert into actual tenancies, and what rents you're able to get out of those spaces, because you could be very well occupied, but the rentals that you're getting are nothing. So yeah, that was the very obvious indicator of an upcoming recovery. Yeah.
Average, if you look at commercial and what were they like in the rental side?
Yeah, upwards of 8%, 8 going on to 9. Yeah.
Occupancy rate, at least for the portfolios or the spaces that you are engaged in?
80%. Yes,
okay.
Yes, and that's a good mark. Anything above 70% is good.
70% is good. All right, and then now COVID happened in March. So what changed between January, or rather December of 2019 and today, May of 2020?
Interestingly, between December when the first case was announced and March when we announced the first case in Kenya, we were quiet, we were peaceful. And then when the first cases were announced, people just disappeared from the spaces. And what we have witnessed is that there are a lot of inquiries to reduce rent, to defer payments. There are a lot of inquiries for business winding down. Within that 1 month, there are actually businesses that have decided to wind down. And what that means is not only do you have vacancies, but you're going to have actually empty space. I mean, you're going to have vacancies and you're going to have lower rentals from the people that are negotiating, or even the rentals that you're going to receive are going to be spread over a very long time because they don't have money to make bullet payments as per lease.
And that's interesting. Was this scenario cutting across different sectors, or were these inquiries and these decisions, did you see them coming from key sectors in the economy?
Sorry, take that again.
Okay, so I'm asking whether it was sector specific in terms of people who are asking for lower rent payments or defying or actually getting out of their lease agreements, or was it cutting across the economy at a broad level?
It's very sector specific because we've got partners in telcos, we've got partners in e-commerce, and we've got partners in what I would call the guys that must operate in brick and mortar. Those are the most affected, and businesses that are not able to pivot should something tilt easily. For example, businesses that cannot do e-commerce, that cannot convert their businesses into like, let's say, pick and drop, those are the guys that have really, really suffered. And I also want to imagine there are businesses that we still have that did not have a long-term view and depend on a quarterly economic performance, or annual for that matter. Should they get a hit immediately or the economy tilts, then they're also not able to sustain themselves. Those are the guys who have really suffered.
And in terms of this, whatever is happening as a consequence of COVID, is it short term? Can we go to the position where the curfew is lifted, where the boundaries inter-county travel is lifted? Do we then go back to normal? Do you have an experience where these people say we will now come back and take up the spaces we had occupied prior to COVID?
Holding a view for up to end of 2020. You know why? The people that because they are very intertwined in the sense that, yes, the businesses will open, but you realize that there are very many people that have lost their jobs. These are the consumers that are targeted by these businesses. So should they not also be able to realize the revenues that they had projected, then somehow the ripple effect has to be felt. And the landlords have got to accommodate that. They have, because you'd rather have people that are paying you over a longer period of time or are paying you a little less than have empty spaces, because those also come at a cost.
Interesting, because now you're bringing out the context of Kadogo economy, something that Safaricom has been able to thrive on, and we've seen numerous research and numerous commentary that Africa, or our economy is just based on I can be able to afford to make payments up until tomorrow, but then after that I can't. And earlier in this conversation you said that you did see a couple of businesses that depend on quarterly, at most annual revenue basis. Maybe you can help us understand or demystify what this means in the real estate space.
So I'm gonna remove residential out of this conversation because that's a different kettle of fish, and I'll focus primarily on retail and commercial and retail. Commercial, you notice that there's a whole segment called startup, which has really been being driven around as an agenda for the unemployed youth, and they've taken up startup as a way of life. And when they come to ask for space, and you look at their fundamentals, they look sustainable. But there are things that you cannot be able to price in a pandemic, for example. When those guys get hit and they have no money to sustain that rental value that you're asking for, you just have no option but sometimes to let them go. If you look at the retail space, for example, we are looking at the services which are being provided that are not necessarily essential. Apparel, for example, those are things that people consume because they've got surplus income. In an instance where that reduces, then they are not very motivated to buy clothes. They're not motivated to buy clothes. You see, those are the things, those are the kind of, when you get out of the consumables, those are the items get affected.
So what you're saying is really, if I look at the way I spend my time and what buildings I do go to shopping malls, and that's stores that stock clothes and shoes, and I go do my hair, do my nails, then I go to the supermarket and buy groceries. And because of the curfew, these outlets, the majority of them have actually been closed. Okay, that's a very good insight. Thank you so much for that. I think as we wrap up this segment for the commercial sector, what next? What to do? If I'm running a business, what should I do? Should I keep paying that rent? Should I get out and then come back in? What are my options today?
I think we all need to have a longer term view to this, because this is totally new to everybody. It's not like politics where we can say it's a cycle, a 5-year cycle. It's not like the stock exchange where you always know how the dips and the bumps happen. What I would say is the businesses and the landlords need to speak to each other. They all need to come round to a table and agree, this works for me, You present it to the landlord, and the landlord will also have a view, and you'll all need to agree that this is what works for me, because at the end of the day, all of these businesses depend on each other. The landlord depends on the tenants, and the tenant depends on the landlord for rent income. However, I will still say, from a landlord perspective or from an investor perspective in the real estate, it's a good place to be. Mostly capital gains and the ability to sustain over a longer time.
So a long-term view. Okay, now let's circle to the residential, where people are staying. How is that segment of your market looking like?
The residential is an interesting one. As I was telling a friend the other day, I noticed there is a bit of a standoff in terms of the landlord and the tenant, mostly because the kind of investor in the residential sector is very different from the investor in the commercial space. I say this because you'll realize that the investors in the residential sector actually do that on a single unit basis, and therefore they're not able to forgo that rent, mostly because they depend on it also for their day-to-day. They've got loans to service for that. So I guess the best thing, we may not witness vacancies immediately, because the kind of markets we also have are very different: high-end, middle income, and low income. Low income is very different. The turnover of tenants is very high, the rentals are very high, their mode of payments are very different, but the class that carries the residential sector is mostly the middle and the high income. What I know is likely to happen is that the standoff will continue, in the sense that the landlords will not lower their prices in terms of rent revenue. But I would propose, or rather what I would think is going to happen, is that the tenants will also come and tell the landlords, this is a situation I find myself in. I really want to pay rent because my family must stay here. Could you please allow me to pay on a piecemeal or to pay over this period of time? And similarly, the guys who have loans might have to talk to their banks and say, could you please let me pay only either interest over this period, or negotiate their loans. There has to be a workaround on that. But in terms of dropping the rent demanded, I don't see that happening immediately.
That's interesting. I think where I live, we've all been talking as tenants, and we're like, I see the president, Alisema, but beyond that, our landlords are not listening. So, I mean, I guess it's just good to be realistic and know if you can't pay for it, just leave it. But then what do I do at a personal level? At what point should I then consider moving out? Should I look at 3 months, 6 months? If my revenue is not good, should I move out? If I can see any volatility in my revenue, would you advise people in that space to move out today? How would you advise somebody who's probably a tenant in that space, or conversely, as you said, an investor in that space who relies on that revenue generation as core to their revenue on a monthly basis?
I would advise that last landlord you have defined to have a conversation with their tenant. They need to understand that this situation is not permanent. And also because you can assume probably it is a tenant that has been here for a longer time, and the scenario they find themselves in is temporary. So what are they working at towards making things normal? And so I would actually approach and tell this landlord, please speak to your tenant, don't let them go, negotiate, ask them, can they pay on a weekly? Can they pay bi-weekly? Are they able to pay, maybe defer? Let's say if your rent is 50,000, say I'm able to raise 30, and the 20 I will pay over the next 1 year, something like that. But for the landlord, I think it's an interesting conversation, because what I know is, if you know, the mortgage book isn't very big in Kenya, so most of those borrowers are on unsecured loans. They need to have a conversation with their bank.
Actually invested in this space, it's probably in your best interest to talk to your bank. But if you're talking to your bank and the onus is on you to prove to the bank that you're not getting money, what documentation do you take to the bank? How do you start this conversation? Because we do know that banks don't engage with you verbally. They actually need proof to actually substantiate the words that you're saying. So what are some of the things, and how would I go about this conversation with a bank?
If I was to do that, I would actually present all the evidence that like what we do is we always ask tenants to support their conversation around an email, around a letter. That would be a very good indicator that my backbone the people I rely on to pay this rent are also struggling. And you can see from the bank statement, this is what is coming in, and this is my projection over this period of time. I think that would be the best evidence you can produce, because I assume the KRA has made people not receive rent in cash. Otherwise, you would hide it. But otherwise, let your conversation with your landlord please be on email, on letter. Put it down.
It not be verbal, let be. So if I'm unable to write an email, write a letter, make sure it gets to them, keep a copy for yourself so that you can be able to just have something to go along with. Okay.
And it's acknowledged, because once it's been acknowledged, you cannot be, it's wrong to be auctioned.
That's very interesting. So put it on paper, then you can actually have a defense with your banks if need be.
Yeah.
With what it's teaching us, go back to record keeping 101.
Please, it's very, very important. Very important.
Right. So you've given us an overview where we were. We were doing better. COVID happened. We are not doing so well. But we are seeing that COVID is short-lived, only that the impact, the economic and financial impact by it to be with us for a longer time. What do we do then if I'm an investor or if I'm looking at real estate? And I ask this based on this context. I have been expecting the prices to correct downwards, you know, the prices of some units that I buy, because they were largely driven by demand and liquidity in the market. Now that liquidity is going to be a bit of a problem, should I realistically expect a correction in prices? Should I put money aside to look at different asset classes? And if so, where should I actually be looking for opportunities and what triggers?
So what I'm going to say is a smart investor definitely does a very good analysis of their, before they decide where to put their money. I'm talking because I know if you look at, let's say from 2016, which I was talking about, through to where we are now, and you put down actual numbers, you'll realize that especially, for example, in the residential sector that people talk about all the time, prices have not technically come down. So if you put your numbers year on year, you'll realize that prices haven't actually been coming down. Why? Because the production is not, we're talking about, what do I call this asset? A finite asset. We don't have that much service land in this country. We don't have that much accessible spaces, and we don't have that good quality investments in real estate. So for me, even purely for capital gains, I will hold something in real estate, even if it was purely for capital gains. However, you have to hold a long-term view. It's not a one-year thing. Yeah.
10 years, 15 years, 30 years?
Upwards of 5 years.
Yes. Okay. I think we're coming to the tail end of our show. I don't know if there's anything else that you feel is pertinent to this conversation that you could leave our viewers with.
I think I would actually suggest, I have seen a lot of conversation with the government and the COVID committee around supporting businesses. I feel like the conversation around rent and the support to the landlords, which can then be passed on to tenants, has not been touched. And that's a very critical mass that the government needs to actually look at in the future, because even where we are right now, we can't tell how long we're going to be here. And one arm of this collapsing then has a very huge snowball effect.
Right. It's interesting that you say that. I mean, some of the things I was thinking of, if these startups are now going to be working from home, from an accounting perspective, can the home, the rent that I pay, can it be an allowable expenditure in as far as looking at my tax obligations are concerned and my revenue? Maybe that would be something worthwhile, because I do run a company, but now I'm not necessarily going to the spaces that I had leased out. I'm doing much more work in the house. And as a small business, what would be very beneficial to me would be somebody saying, Bithe, your rent, a part of it because you work in the house, if you can be able to provide proof, it can be allowed as part of your corporate expenditure. I think that would be very helpful.
Exactly. It's going to inform a lot of things that we had never foreseen, because you realize that the companies are now going to be making savings, which again, we could have a conversation around how that saving gets passed on to you.
Much for your time, and I do hope that once this is cleared, we can be able to sit with you again just to help us come up with a framework or a mindset of, okay, I want to go long term, what should I do? So thank you very much. That was Lilian Mbaabu. She is a portfolio manager in the real estate sector, sharing her nuggets of wisdom. She continues to see opportunity in this sector, but it has to be long term. And I think if I combine what she has said and what I have seen out there, one thing that actually makes me very excited about the real estate sector is this. Once I was speaking to a friend of mine, and he's based out of Seoul in South Korea, and I asked him, what investments do you put your money in? And he's like, he doesn't invest in anything because he never has that extra income to invest in. And I asked him, you don't own your house? He's like, no, he can't afford to buy his house. So when I look at the outlook for Africa, this asset that you're buying today, this house that you're buying today, will not be available for people in 10, 15 years. So if you have the money, put the money aside, wait to see what happens in as far as the economy is concerned, and buy your assets. And I think, as Lilian told us, look at real estate for north of 5 years. If you can even go 10, 15 years, it will certainly be worthwhile for the next generation, if nothing else. Thank you for joining us once again, and I hope to see you again at the next show. Good day.